Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. The dollar falls on reports U.S. President Donald Trump may name his next Fed chair soon, signaling rate cuts may come sooner than expected. Talks ahead. President Trump says the U.S. would hold a meeting with Iran next week, but signals a diplomatic agreement with Tehran may not be necessary. And Trump succeeds in getting NATO leaders to hike defense spending, but threatens to double tariffs on Spain over its failure to meet the 5% target. It has just gone 8 a.m. across the Emirates. I'm Shimona Versace in Dubai. The ceasefire, the truce between Iran and Israel still appears to be holding, with Trump yesterday in his comments around the NATO press conference suggesting that direct talks between U.S. and Iran could take place as soon as next week, without giving a lot of information about where or how those talks are going to continue. So something to watch out for. We'll be talking about that on the show. In the meantime, we're going back to taking a look at how markets are faring. More headlines as well coming through. A story overnight from Wall Street Journal suggesting that President Trump may be looking to name the successor to the Fed current chair, Jerome Powell, as soon as the end of this summer, which is about 6 months earlier than it would typically happen. So on the back of that, the market has started to price in a dovish reaction. Remember, we were talking about that yesterday, that terminal chart. Traders are already pricing in a more dovish successor to the Fed chair. And in turn, the Fed chair has still been delivering comments to the House and the Senate the last couple of days, sticking to that wait-and-see mode. So this is where we are today. S&P futures very close to all-time highs, not quite there yet, though, trading in the green, about 9 basis points higher. NASDAQ 100, an all-time record high yesterday. So a new one has been reached throughout the course of this week. The USD, as you can see this morning, falling, I would say, on the back of some of the speculation around Jerome Powell and his successor, and whether he will be succeeded by someone a lot more dovish and more willing to cut interest rates than the Fed chair, Jerome Powell. And then Brent, you can see just shy of $68 now, 0.3% higher on the session. We are actually 2% lower than where we were before the Iran-Israel war started. So we've come a very long way, a roller coaster ride for oil. But this is where we are right now, net weaker than the point the day after that war started. Okay, switching over to our terminal chart, I was just saying that the NASDAQ 100 has reached an all-time record high once again. But take a look at these two stocks. NVIDIA, once again, surging past Microsoft to reclaim the most valuable company. It, too, has reached another record high in yesterday's session. So we've jumped more than, I think it's something like 50% for NVIDIA since the lows that were reached back in April. So tech is very much still leading the charge as far as U.S. markets are concerned. Well, markets are weighing a Wall Street Journal report that President Trump may speed up naming his pick to succeed Fed Chair Jerome Powell. The report says he could reveal the next central bank chief by September or October, even though Powell's term runs for another 11 months. Sources say some of Trump's allies have pushed for Treasury Secretary Scott Bessent to get the job. Trump has also praised former Fed Governor Kevin Warsh as very highly thought of. The president has been pressuring Powell to lower rates by 2.5 points. And took another jab at him while speaking at the NATO summit.
Yeah, I know within 3 or 4 people who are going to pick. I mean, he goes out pretty soon, fortunately, because I think he's terrible. We have no inflation. We have a tremendous economy.
Let's get more analysis on the markets and bring in Manpreet Gill, Standard Chartered Wealth Management CIO for Africa, Middle East and Europe. Manpreet, good to have you with us. The story today, perhaps moving away from the geopolitical focus back to Fed watching. What do you make of this story in the Wall Street Journal that the president would be looking to name a successor, likely to be a more dovish successor to the Fed current chair, Jerome Powell, as soon as the next couple of months?
Well, I think President Trump has made no secret in the past of his desire to get someone else in the Fed chair. But obviously, there's the question mark that stays out there in terms of his actual ability to do so before Powell's term ends. But I think some of that dovish sort of tilt from a market perspective was already starting to come through. If you look at some of the comments from Fed governors just around the most recent meeting, Powell, of course, sticking to his guns, but we saw a bit of dovish tilt come through in the comments of some of the governors in the meeting. In our view, it may be too soon, but by by the time we get to September and we're beyond possibly the worst of worries about oil prices and its sort of shock to inflation, worries about what happens to trade, then I think there's more room for the Fed to be dovish.
So the Fed chair's term ends in May of next year. If his successor is announced as soon as September or October, per the Wall Street Journal article, does that effectively make the current Fed chair a lame duck, or will he still be able to move markets?
Well, assuming he does stay till the end of his term, obviously his ability to influence policy right till his last day, remains intact. But it's quite possible that what Trump's seeking to do is influence forward thinking. And as we know, markets always try to look 6 to 12 months into the future.
Yeah, I guess my point is that the market may start paying more attention to what his successor is going to say, as opposed to him, in terms of piecing together monetary policy clues.
Absolutely.
Yeah.
And I think you'll start to see that potentially in markets sort of and what they price beyond sort of, Powell's term, which we'll start to see already quite soon. So one can understand that challenge, but I still wouldn't discount the importance, though, of the economic data, because I think by the time we get well into the second half of this year, our own view is that data will reach the point where it'll be much easier to make a dovish case. And we think that's part of the reason why we're already starting to see a reaction in yields and the dollar. This is one part of the debate, but there's also the economic data.
Yeah. So all of this just adds to the policy uncertainty around what's going to happen in the next couple of months. And I just wonder why equities are making new highs while the dollar is still 9% weaker for the year, 9% weaker for the year.
Well, the clue sits in history. If we go back and look at periods of weak dollar, lower rates, and a weak dollar in particular, actually tend to be great periods for equities and other risky assets. So I think that explains it, as long as growth keeps its nose above water, right? Our view is that growth slows, but is positive, the soft landing scenario. I think where the debate becomes much more real is the relative performance of U.S. versus non-U.S. equities. When the dollar weakens, you generally tend to see, the U.S. struggle to outperform the rest of the world in the manner that we've seen in the past decade or so. And that's part of the reason why we do expect a weaker dollar for a variety of reasons other than the Fed. But that's the reason why we started to upgrade non-US equity markets. We start to look at emerging market bonds. So we think it's worth dipping your toes in the water into the non-US world.
But do you not think so much of that bearishness is already priced into the USD here, given the significant underperformance? It's down 9%. That's a significant amount.
Well, down 9% from its peak. But the way we'd look at it is we've been in about a 10% range since late 2022, but we've only just started to break below that. And there are two big drivers that we think haven't fully played through. One is, of course, the net impact of trade tariffs. Regardless of where tariffs ultimately end up, we've seen the dollar already decouple from interest rate differentials to some degree. And the second is rate differentials themselves. A lot of the non-US world, the ECB's already cut rates by quite a lot. We're discussing when they'll eventually pause, but the Fed's yet to get started. So we think this combination can still push the dollar weaker from where we are today. And that still would be quite far from levels we were at just as recently as 2020 or 2021.
Yeah. How are you thinking about the fiscal push that's to come? Trump's what he's calling the big, beautiful tax bill. What sort of an impact is that going to have on markets?
So I think the most straightforward impact actually is the positive stimulus it provides to economic growth. Because there is still that debate that if you look at recent economic data, we have seen it surprise negatively. But the reason we're still holding on to our view that a soft landing is achievable, positive growth, is partly because the fiscal support is there, in addition to everything else we're seeing. There is the worry on the fiscal side in terms from a bond market, credit quality perspective, but we know those don't tend to be the dominant factor, especially when it comes to bond yields.
So when we think about fiscal spending, the latest announcement yesterday, NATO countries working towards a 5% defense spending target with 3 and a 3.5% on defense and 1.5%, however they want to describe it, so long as it pertains to defense. Those are the details. But at the end of the day, they need to fund that spending. Should we perhaps be paying more attention to the amount and the extent of fiscal borrowing that European nations are going to have to take on to fulfill those defense pledges?
Of course, we should pay attention, but I'd argue that many economies like Germany have quite a bit of fiscal room that they haven't been utilizing.
But Germany
already.
does. The other countries don't.
The other countries don't. And that's why I say we still need to keep a watch on just how exactly this plays out. But I think what I'd balance it with is we've seen many countries, through the last decades, forget going back much further in history, which have run very high deficits. But when it comes to bond yields, when it comes to equity markets, the focus has still been much more on the near-term outlook economic growth, the near-term outlook inflation, those have ultimately dominated. The fiscal has been a concern, but some of the long-term academic studies have shown that can persist for a long, long period of time. As an investor, what I take away from that is the positive impulse it provides for European equities and industrials in particular. I think that's the impact we'll see most immediately.
Yeah. Manpreet, so great to have you on. Thank you so much for sharing your perspectives. Manpreet Gill, Standard Chartered Wealth Management's CIO for Africa, Middle East and Europe. And coming up, President Trump says the U.S. and Iran will meet next week, but he's casting doubt on the need for a diplomatic deal. The details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. President Trump says the U.S. will meet with Iran next week while casting doubt on the need for a diplomatic agreement on Tehran's nuclear program. Trump continues to insist that last week's U.S. strikes on Iranian nuclear facilities had obliterated them. He says that means a diplomatic agreement may not be necessary, even though Iran has signaled its readiness to resume talks.
Now this incredible exercise of American strength has paved the way for peace with a historic ceasefire agreement late Monday, and we call it the 12-day war. Spoke to a few people. I guess that just sounded like the right name. It was a 12-day war. And we think it's over. I don't think they're going to be going back at each other. I don't think so.
Joining us now to discuss is Paul Wallace, Bloomberg's managing editor for economy and government in the Middle East and Africa. So that was a small snapshot of what President Trump said yesterday during the NATO press conference. Obviously, still a lot of focus on the geopolitics of the region, essentially saying that he thinks he thinks that the Iran-Israel war is over, but then also flouting potential direct talks between U.S. and Iran next week.
Yes, which is pretty big. And I think that's sort of was his game plan when he came up with, when he decided to go for these strikes over the weekend on Iran's nuclear facilities. He wanted, one way or another, to get them back to negotiations. Although they were in them, they were stuck on this point about enrichment. Iran wants to be able to enrich uranium at least to a low level, the level needed for civilian purposes like fueling nuclear power plants. Trump and the Americans don't want them to do any enrichment at all. Trump seems to think that this kind of pressure that Iran has been under for the past 2 weeks will get them to the point where he can agree with a deal with them. But he did also say that he's not. He did also say that a deal is not a necessity at this stage. And I guess that he's alluding to the fact that Iran's been so weakened militarily that even if there is no deal, he probably thinks that Iran poses much less of a threat to other countries in the region and to U.S. assets.
Yeah, that caveat was important to mention, noteworthy, that he said he doesn't think a deal is necessary. But also attention once again shifting back to Gaza, though, of course, the war never stopped there. But it seems as though the U.S. also think that there is some hope of a ceasefire once again in those negotiations.
Yes, of course, the fighting raged it continued to rage throughout the past 2 weeks in Gaza, but world attention really did shift towards the Iran-Israel war. I think it will come back onto Gaza quite a bit now. Trump has said for a while that, one way or another, he wants the Gaza war to be over. And I think that he could apply a bit of pressure on Israel to try and ensure that. I think he's going to put pressure on the likes of Qatar, the main mediator between Israel and Hamas, to get Hamas to a point where a deal is possible and where they can get the remaining hostages out. So, yeah, there will probably be some movement, but we've obviously been here lots of times in the past 20 months, and there's no guarantee of a deal. There's no guarantee that the war in Gaza ends anytime soon.
Yeah, so many developments over the last couple of months in the Middle East. Paul, thank you so much for being on top of it all. Paul Wallace, Bloomberg's managing editor for economy and government in the Middle East and Africa. Thank you. Joining us now is Seyed Hossein Mousavian, a former Iranian ambassador to Germany. Good morning to you, Mr. Ambassador. I just want to start off by asking you how much of a setback this war was for Iran militarily, in terms of nuclear capabilities, and in terms of the significant losses at a leadership level within the RGC.
Good morning. I'm confident that the war on Iran has given a big damage to the Iranian nuclear and defense and military facilities and capability. But nevertheless, I believe Israel and the U.S., they both failed on getting their main objectives, because the main objective was first to destroy Iranian nuclear program facility completely. Definitely they have failed. And the more important objective, I believe, was to bring a regime collapse in Iran, and they again have failed on this objective. Therefore, I think what they did has been the result of the military strike on Iran could be completely counterproductive, because the consequences is beyond Iran.
Okay.
Because
so let me ask you a question,
because practically it was
I just want to come back to something that you were saying. Yeah, I'm going to come back to non-proliferation treaty, but I just want to come back to something you were saying, because the U.S. administration are saying that they managed to completely obliterate those nuclear sites overnight. There's also been intelligence released from Israel, the atomic agency, saying that this setback amounts to years. What is the Iranian intelligence assessment saying vis-a-vis how much damage was actually leveled at those nuclear sites? Is it a matter of setting back the nuclear program by months, or is it years?
Nobody knows the level of damages, neither IAEA nor the U.S. and even nor Israel. Even you have heard the disputes in the U.S. about the level of the damages. However, we can agree that there has been severe damages, but what was and is the objective? You cannot kill, and you would not ever been able to kill the know-how and technology. Iranians, they have the know-how of enrichment. And if they want, even if this is postponed for some months or 1 or 2 years, they would be able to get it. That's why, what is the issue? The issue is just to destroying some buildings, even some centrifuges, or to destroy Iranian nuclear program. The U.S. would never be able to kill the Iranian nuclear program, because you cannot kill know-how and technology. They have it already.
Okay, let me ask you another question. There was some discussion that Iran was considering leaving the Nuclear Proliferation Treaty, the NPT. Under what conditions would you see that happening?
The fact is, for the first time in the history, 2 nuclear states have attacked 1 non-nuclear state. This is unprecedented in the history. Iranian nuclear facility was under the IAEA supervision, was under the safeguard, and the U.S. as a nuclear power and Israel as a nuclear armed state attacked Iranian nuclear facilities. This is a total disaster for non-proliferation treaty, NPT, and for the IAEA, and for the international rules and regulations. The most important issue, I think, from now on for Iran would be how NPT and IAEA can protect Iran against such strikes and such wars. Because based on NPT and based on UN Charter, based on the IAEA Charter, no nuclear state can attack any nuclear facilities of member states of NPT. This has happened. That's why I think the damage is beyond Iranian nuclear issue. the non-proliferation mechanism worldwide is completely destroyed, because there has been no reaction from IAEA and the United Nations Security Council to protect Iran, a country which was attacked by two nuclear states.
Well, it's also worth noting, of course, it's also worth noting that the IAEA put out a report the day before the war started suggesting that Iran had breached some of the requirements under the protocol. But let me just put this next question to you vis-a-vis the potential discussions that President Trump talked about yesterday, direct discussions between Iran and U.S. There were several negotiations going on, the several rounds in the run-up to the war. How do you think the discussions this time around will differ from the pre-war discussions? Is there any likelihood that Iran signs up to a zero enrichment policy?
First of all, in the same report which you mentioned, the IAEA has made it clear there is no evidence of diversion toward weaponization. And during 23 years, in over 100 reports, the IAEA has frequently and constantly has mentioned there has been and there is no diversion in Iranian nuclear program toward weaponization. This is the same assessment American intelligence organizations have reiterated since 2007. Therefore, there was no necessity to attack a country which there is no evidence of diversion toward weaponization. This is number one. Number two, this time I think the U.S. would be in extremely difficult situation to negotiate with Iran, because President Trump in his first term killed the deal. Deal was working. Iran was in full compliance. It was adopted by United Nations Security Council. It was adopted by the IAEA. Iran had zero failure, and the U.S. killed, withdrew, and imposed the most comprehensive sanctions. This is the first term. Now, in the second term, President Trump invited Iran to negotiate. Araqchi and Witkoff already in the first three rounds, they agreed on the principles. They were on the verge of finalization of the agreement. Suddenly, Israel and the U.S. attacked Iran. Then there was no international reaction.
So it's an element of trust that's
Iran.
gone.
That's why I think this negotiation would be extremely difficult.
Mr. Ambassador, thank you so much for joining us on the show today and for sharing your perspectives. Seyed Hossein Mousavian, former Iran ambassador to Germany, thank you. Still ahead this hour, police and protesters clash in Kenya as thousands take to the streets to mark 1 year since deadly anti-government protests. We'll discuss the details later. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. The dollar falls on reports U.S. President Donald Trump may name his next Fed chair soon, signaling rate cuts may come sooner than expected. Talks ahead, President Trump says the U.S. would hold a meeting with Iran next week, but signals a diplomatic agreement with Tehran may not be necessary. And Trump succeeds in getting NATO leaders to hike defense spending, but threatens to double tariffs on Spain over its failure to meet the 5% target. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. The ceasefire is still holding between Israel and Iran. The U.S. president talking about the possibility of direct talks between U.S. and Iran next week. So developments on that front. But markets once again leaning back towards focusing on data and the testimony by the Fed Chair Jerome Powell to the Senate and the House committees over the last couple of days. Wait and see approach. But later this afternoon, we are going to get important data to watch out for, including that core PCE measure, which is a big indicator, a relevant one for the Fed. But this is where we are. S&P futures trading sideways, very close to all-time highs once again. Nasdaq 100 at another all-time high, so up 0.2% in future space this morning. The USD dipping a little bit, down 0.2% after that Wall Street Journal story reporting that President Trump could announce a successor to the Fed chair as soon as September or October of this year. That's quite early and would perhaps the market anticipation is that he would be replaced by someone more dovish than Powell and more committed to rate cuts. So that's the dovish reaction to the USD today. And then Brent sitting just shy of $68. We are 0.3% firmer, but of course significantly lower than where we started the week, down about 14% just in a couple of sessions. Let's switch over and take a look at our terminal chart. I did mention that the Nasdaq 100 is at its all-time high and led by none other than the magnificent 7 stocks. And here specifically, I'm talking about NVIDIA and Microsoft. NVIDIA yesterday seeing a record run, and you can see it has once again overtaken Microsoft to become the world's most valuable company. So this is after the bit of a shakeout that we saw back in April. You can see it in the chart there, but has fully recovered and now once again overtaken Microsoft. Well, the UAE has managed to thrive during global instability, drawing capital during the Arab Spring, opening up quickly during the pandemic, and attracting Russian money after Moscow's invasion of Ukraine. But the Iran-Israel war posed one of the toughest tests yet for the country's neutral and open for business stance. While it seems to have managed to sidestep any major fallout so far, an undercurrent of nervousness remains. For more, Bloomberg's Deputy UAE Bureau Chief Abir Abu Ahmad joins us now. So you've been speaking to several finance professionals over the course of this week. What are they saying? How have the events over the last 12 days shaped people's perspectives and perception of the stability of this region?
Yeah, good morning, Joanna. So, look, I mean, we've been pursuing this story since the start of the escalations between Israel and Iran. And, you would think that the business community in Dubai has sort of, taken different stances as the situation escalated. So on the very onstart of this, we spoke to a bunch of portfolio managers, some hedge fund managers, people in the business community in Dubai, and there were definitely jitters in the overall sentiment, but people were more or less relaxed about the situation. Someone told us, and this was before, the intervention of the U.S., someone told us that, a U.S. intervention would really change the narrative. And then the U.S. intervention happened, and that person was like, yes, but now we got to see how Iran retaliates. And we've all seen how Iran retaliated. We've all seen what President Trump said yesterday about going back to the table with Iran. So this is not to say that regional instability does not affect Dubai or does not affect the UAE and neighboring countries. But it's just to say that the country has, more or less kept this reputation of being a safe haven. And you mentioned all the events of the past decade, the Arab Spring, the Iran sanctions, and more of those.
Yeah, well, the thing is, economic stability goes hand in hand with political stability. So what can the UAE do to safeguard its status as a safe haven place to do business?
Yeah, I mean, look, the UAE is doing what the UAE is doing, and I think you mentioned those in the beginning of your introduction, is diplomacy. It's the fact that the UAE has been trying to cultivate its status as the Switzerland of the Middle East, if you were, and that's definitely worked in its benefit. We've seen that happen over the past couple of weeks, where it's kept up dialogue with Iran, it's kept up dialogue with Washington, and so it's kept this kind of reputation that, listen, we want to talk to everyone. We don't want to be seen as anyone's enemy. And that's definitely helped with the way economists we've spoken to see the economic repercussions of this. So they told us that, yes, there were flight disruptions for, briefly a few days ago. That's not to be seen to have any major effect on tourism. That's not to be seen to have any major effect on the revenues coming into aviation. One thing that we may see is this having an implication on soft data, such as PMIs. We've already seen those soften in May, so that may continue. But for hard economic metrics like non-oil GDP, we don't see any major effect to the headline numbers.
Yeah, and also the response time was very quick. I was reading on our terminal this morning a story that Qatar Airways managed to move 20,000 passengers within 24 hours. So they had to respond rather quickly. And even markets in the region also seem to have recovered quite quickly the last couple of days as well.
Absolutely. I mean, the UAE stock markets have led the recovery when you compare them to global peers. And so you really see that the UAE has kept up this safe haven aspect. But look, that's not to say that, the picture is great. Regional instability is not good for any country. And, a lot of the people that we've spoken to, I've been speaking to a lot of people over the past week. A lot of the people are saying if the these escalations continue, or if these escalations take a new course, that would be a net negative for the UAE and the region.
Something to watch out for. Abir, thank you so much. Abir Abu Ammar, Deputy UAE Bureau Chief. Now, moving on, we're going to talk about emerging markets. We are seeing gains today across the EM currency basket amid weakness in the dollar as investors keep a close eye on signals for more Fed rate cuts. Traders appear to be looking past the cooling geopolitical tensions in the Middle East and back to the direction of U.S. monetary policy, helping to stabilize risk sentiment. Let's dig deeper into the outlook for emerging markets with Citi's head of EM strategy, Luis Costa. Luis, great time to have you on. I was looking at a chart on the terminal earlier today showing that EMFX, an indicator that tracks a basket of EM currencies, is actually very close, if not at the all-time highs. Why is that the case, do you think?
Well, it's all predicated on a weak dollar, and we think it's probably going to take further lags. It has to do with the real rate valuation in the U.S. and this differential between U.S. and the real rate valuation in EM currencies continues to be very much appealing. It's very interesting to note as well that central banks in EM are not rushing to cut rates further, so that this is still keeping this carry value in some of these currencies. It's, for example, the case of Brazil, it can be the case of Mexico. So we still believe that, there is more to go. Obviously, the pace of dollar decline over the past quarter or so has been substantial, right? We are not expecting the same pace, but I call it a well-behaved dollar, and a well-behaved dollar is allowing EM currencies to perform, especially the high-yielding currencies, to perform a lot better. And this is changing the scope, the anatomy of flows, of course, right? So this is making local currency debt in EM a lot more alluring, and we are continuing to see inflows into the sub-asset class.
Yeah, but, a well-performing dollar also has consequences. And what we've seen is some of these Asian countries have been actually intervening to stem the very quick appreciation of their currencies versus the USD. We saw it in Hong Kong this morning. We saw it in Taiwan a couple of months ago. That caught a lot of attention. Which, to your mind, are the countries that are most exposed to, I would say, perhaps a disproportionate amount of appreciation versus the USD that will make the authorities uncomfortable?
Well, for that, you will probably look at, jurisdictions with a more positive balance, right? So you will look at net international position in many jurisdictions. And then, obviously, that turns you to Asia a lot more. So a few names that you mentioned there, they are not surprising at all. Even in Hong Kong as well, we saw, central banks stepping in as well, basically to slow down expectations of appreciations of the local currency. So that obviously magnifies the pressure, the appreciation pressure in some of these currencies. So, but outside Asia as well, it goes back to the point of, alluring local yields. And if the world continues to buy local yields, for example, in South Africa, you will probably going to see, appreciation pressure. And that's exactly what we think. We do believe that some jurisdictions, they have a little bit of a stronger bias towards local appreciation. And let me just say one thing. We are still living a very strange period of tariff negotiations. So,
so that was going to be my next question.
Exactly. Policymakers around the world, they are not necessarily one. Go ahead.
Yeah, Luis, let me just bring it back to that. Yeah, because I was looking at EM credit spreads this morning, and we did see a massive widening out of spreads around the time of the tariff announcement, Liberation Day, gradually came back in again. Very minimal impact, I should say, despite the geopolitical tensions in this part of the world. And we're back at the tights again now. Why would you knowingly buy EM credit, knowing that there's another tariff deadline coming around the corner on July the 9th?
EM credit has been extremely supported by U.S. resilience. And and let's go back maybe 2 years in time when we had many more distressed assets out there, right? I mean, the whole complex of Africa high yielders, they were in semi-stressed or almost distressed levels. Since then, there was a lot of intervention and a lot of involvement of multilateral money, right? So I think that seems to be stabilized. The question is, are we going to trade tighter? I think that the bias towards tighter spreads obviously becomes a little bit less acute. But I have to say, I only expect a lot of widening if you see, obviously, geopolitical events, but away from that, a growth scare out of the U.S. And I think that, I mean, if U.S. growth really derails, I think that can be substantially negative for EM credit. For the time being, investors will be absolutely happy to sit on the carry.
Okay, so to round it up, Louis, which EM markets do you like right now?
We continue to like local currency more than credit, right? So we do believe that it's the local currency aspect is actually amplifying the outlook for disinflation in many jurisdictions. It's the case of Mexico. It's still the case of Brazil. In CEMEA, we like South Africa quite a lot. In hard currency, we do like the Middle East complex, the GCC complex. Why? Because that continues to receive inflows from Asia. They can't find enough yields out there. So we do see that there are still some very interesting bright spots in either sub-asset class, local currency and credit.
Louis, always lovely to have you on. Thank you so much for getting up early for us. We really appreciate it. Citi Head of EM Strategy, Luis Costa. Well, Saudi Arabia's revenue from oil exports slumped to the lowest in 4 years in April, thanks to crashing oil prices. Proceeds from the sale of crude and refined products fell to $16.5 billion. That is down 21% year-on-year and 7% from the prior month. Crude prices plunged in April on U.S. President Donald Trump's global trade tariffs and the shock decision by OPEC Plus to speed up plans to raise oil output. And coming up, 8 people have died in Kenya after protests across the country to mark 1 year of deadly anti-government demonstrations. Details of what happened next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. 8 people have died and at least 400 have been injured in clashes between the Kenyan police and protesters. That's as thousands took to the streets across a dozen towns to mark 1 year since deadly anti-government demonstrations. The protests in June 2024 were against planned tax increases and government corruption. For more, Bloomberg's Ondiro Ganga joins us now from Kigali, Rwanda. Ondiro, walk us through what happened.
Hi, Jumana. So like you mentioned, these were protests that were meant to commemorate the lives that were lost last year during the finance bill protests, where 60 people were shot dead by the police. And these families were to march to parliament and commemorate most of the lives that were lost, because a lot of open fire was shot at protesters when they breached the walls of parliament and made their way into the parliament ground. And so the goal was to go there, honor the lives that were lost, but that is not exactly what happened. Kenyans woke up to barbed wire, a lot of police presence, and a lot of trucks around that area. What ended up happening was a lot of running games, chase between police and protesters, and they ended up protesting in other parts of CBD and also across the country. And unfortunately, again, tear gas, brute force, live ammunition, and 3 people ended up losing their lives. Hundreds have been injured, and they're admitted in different parts of the country in different hospitals. What was also very interesting to unfold is the fact that the Communication Authority of Kenya sent a warning to 2 national media houses to stop broadcasting the live protests, saying that this was going to incite more people. And they ended up switching these signals. However, Kenyans went and continued watching these protests online. And what is becoming very clear is that they are hell-bent on making the government aware that they're not happy with the current state of the country, whether it's offline, online, or on the ground.
Yeah, and they haven't been happy with the state of the country for a while. It's been a year since the first round of deadly anti-government protests. Why are Kenyans still out in the streets protesting today?
Jumana, if we just look at yesterday's protest, the basis of this is justice is yet to be served. 60 people lost their lives. Investigations are slow. Nobody has been convicted yet. And the brutality by the police is still continuing. There's a blogger who was taken into police custody, Alberto Juang, and he lost his life. And when Kenyans went out to protest this, a hawker was shot close range by the police. And this is some of the issues that Kenyans are raising, that the more things change, the more they remain the same. There's corruption, government expenditure is ballooning on issues that are not essential, and then critical sectors like healthcare and education are not getting enough budgets that they need. And also Kenya currently is in a state of paradox. You look at macros, they look sterling on paper. Economy is doing great. Inflation is low. The currency is stable. Reserves are adequate. But then when you talk to Kenyans, they're telling you business is low. Sales are low. Many of them are wrapping up and folding their businesses. Non-performing loans are high. Revenue is shrinking, and they don't have enough to even spend. Yet the government is beating its chest and saying things have improved. And that's where there's that disconnect. And you find that President William Ruto was very popular for his bottoms-up economic model, but right now the bottom line of Kenyans is not resonating with his policies and his politics.
Bloomberg's Andira Ganga in Kigali, Rwanda. Thank you so much for the reporting. And coming up, NATO agrees to boost defense spend to 5%. It is a win for U.S. President Trump. More details on that next. This is Bloomberg.
And together, allies have laid the foundations for a stronger, fairer and more lethal NATO. NATO leaders agreed on the The Hague Defence Investment Plan. And this will fuel a quantum leap in our collective defence.
That was NATO Secretary General Mark Rutte speaking after leaders met in The Hague, agreeing to increase defense spending to 5% of GDP. It is a win for U.S. President Trump, who has repeatedly criticized European allies for underspending on security. However, it was also a victory for the Secretary General, who had worked for months to ensure the U.S. renewed its Article 5 commitments on collective defense. So for more on this, we're joined by Bloomberg's Oliver Crook. Perhaps a bit of a diplomatic win for, as we described him, the flatter-in-chief Mark Rutte yesterday. But that 5% target, break down the details for us from those talks, because it really is a big milestone for these NATO members.
Absolutely, Jumana. I think it's fair to say, in the news industry, we're always sort of wondering, what is the signal, what is the noise, what is the thing that we're going to remember going into the future? With this commitment to spend 5% of GDP on defense for European allies, this is truly a sea change. This is an absolutely monumental shift of priority that will have massive and lasting impacts for the decades to come. And it comes at a time when, as you mentioned, Donald Trump came over to Europe. And this is, I think, a summit and a discussion with European leaders, a rare one, in which I think everybody left pretty satisfied, pretty happy. Trump got what he wanted on the 5%. European leaders basically stepped up to the plate to start to spend on defense in a way that, frankly, they had not been doing adequately for the past few years. And I actually caught up with the president of one of the nations that is one of the newest members of NATO, with the longest land border with Russia. That is Finland, speaking to Alexander Stubb just moments after we got that agreement. Have a listen to what he had to say.
The outcome, I think, was a great success for the whole alliance. So basically what happens is that you set a target, and after that you review those targets through capabilities every year. Technical terms, it's called NDPP. So every member state has to fulfill the targets that have been set, and I'm quite convinced that the alliance, SECURE, and the military staff in general will make sure that the member states do their part.
And Alexander Stubb is somebody who had retired from politics before the invasion of Russia. Finland had no interest in joining NATO. All of that shifted over the last few years, and now they're spending 5% of GDP on defense. He said that if you had asked me any of those things 3 years ago, I'd say go see a doctor. Now it's reality. There are a couple of sticking points, Jumana, that I think bear mentioning. Spain was the fly in the ointment about getting to that 5% figure. Donald Trump aired his displeasure with Pedro Sanchez, the Prime Minister of Spain, threatening basically to have more trade tariffs with Spain if they do not hit those targets. But overall, Jumana, I think most people can walk away from the summit feeling pretty happy. But what begins now, Jumana, is the basically reordering in many ways of the European economy, more shifting towards defense and some very difficult decisions for governments about where to spend money.
Yeah, is President Trump weaponizing defense to get what he wants from these trade talks, Oliver?
Well, listen, I think that is one of the great fears. And when he was on Air Force One on the way over to The Hague, he started talking about Article 5, and maybe there are different interpretations of Article 5. I think that all European leaders and anybody who's sitting across the table from Donald Trump is very acutely aware of the fact that he's willing to basically weaponize almost every other sort of section of policy in order to achieve his goals and to put his America First agenda forward. And I think that was one of the fears, that potentially NATO and the defense could be used at that. The question then is, does that go away simply because there is an agreement? That is going to be one of the questions before European leaders today who are meeting in Brussels, trying really to get onto the same page in terms of what their tack of negotiation is for those trade talks. Because, Jumana, we're, 2 weeks away from July 9th when we're going to get those 50% tariffs from the United States to the EU if you don't get a deal. So that is going to be #1 priority for the leaders here in Brussels.
Bloomberg's Oliver Crook in Brussels, keeping us up to speed on everything that's going there. Well, a bit of housekeeping. This was my last show for the week. I'll be off next week. Lizzie Burden will be filling in. That was it for our show, though, today. Horizons Middle East and Africa. I'm Joanna Brisecci.